Well, the budget is no doubt pivotal for small and medium-sized businesses as well. Record numbers of businesses right now are collapsing into insolvency as they battle soaring wages, rents, energy prices. And on top of that, a decline in consumer demand. CreditorWatch says 1 in 11 hospitality businesses shut their doors in the past year. So Ed Boyd earlier spoke with Kaylene Hubbard, tax partner at KPMG.
Well, we certainly hope so. The feedback that we're getting from our clients is that there are lots of pressures, as you'd expect at the moment, cost margin pressures, high regulation in our economy, and also difficulty with recruiting and retaining good staff.
We've seen a lot of businesses go into insolvency as well, I think almost record levels right now. So it is clearly a tough time to be a small or medium-sized business owner.
Yeah, we have. I mean, that's coming off a pretty low base, to be fair. And I think the other aspect to that statistic is that there are actually a lot more companies now than there were 5 years ago. So the statistic may not necessarily be as bald as it seems, but I think it is fair to say that small to medium businesses are bearing the major brunt of consumer cost.
And we did see a rate cut from the RBA a couple of months ago, but it's not really had much of an impact yet on economic confidence, has it?
That's correct. And what we're hearing from our clients is that even another interest rate cut wouldn't necessarily be enough incentive for them to increase capital investment in particular.
All right, some of the things we know are going to be in the budget. The instant asset write-off is going to be extended again. $150 in energy rebates. How much of a help are they going to be?
Things like the instant asset write-off is a help. What we're looking for with productivity, in order to get productivity increases, is that you're looking at a situation where you can get more outputs for less input, or the same output for less input. And things like encouraging small business investment is really key to that. So it's that concept of capital deepening, where you can increase capital investment in order to create growth that way. So things like the instant asset write-off, extra R&D incentives, full expensing for business investment or capital investment, they're all good things. They do they can be a little bit of a sugar hit, so they do sort of bring forward incentives. So even something like giving a holiday on those kinds of things for 3 years would actually be quite beneficial and smart. So it takes a while to embed new capital investment, particularly with tech. So those kinds of things would be pretty welcome from a small to medium business point of view.
You know, energy costs have been a really big factor for everyone's bottom line. But yeah, the $150 extension, that doesn't sound like a lot of money.
It doesn't, no, and at the moment it's not extending to businesses either, so that would also be reasonably welcome. I mean, a bigger number would be nice, but obviously being wary of inflationary pressures, etc. But if that energy bill relief could be extended to businesses, that would be certainly of benefit.
I guess the big challenge is, you mentioned it before, improving productivity for our economy, because that has been at very low levels and weak levels. And if we can get small businesses and medium businesses being more productive, then it will help everybody.
Correct. And I think making sure that investment is made in Australia is also important. Overseas jurisdictions are attractive for larger businesses. We're certainly seeing corporate tax rates in overseas jurisdictions come down. So to make Australia attractive for investment, those kinds of incentives would make a big difference.
Yeah, big businesses in Australia can choose to go overseas, but small businesses, the people that run them live here, they're very restrictive about, they can't go anywhere else.
Yeah, correct. So we want to make it attractive for them to invest. Things like the Made in Australia plan would also be helpful, to the extent that that's beefed up around encouraging Australian-made products, and people to buy Australian-made would also be of benefit for businesses which are, restricted to an extent to the Australian market.
I mean, the share of taxation for the government revenue just keeps getting bigger and bigger.
It does.
We're not going to see a tax cut, I don't think, this election.
No, I don't think
this budget, all this election's coming up as well.
No, and the other thing I think that we're also hearing from our clients, and we recently did a survey of our mid-market clients, is that there is a strong appetite amongst the mid-market for, quite substantive tax reform, but I don't think it's something that we're going to see necessarily, obviously, in this budget or in the near future.
Is there any additional support we might see around cyber security or, things like that?
I think cyber upskill would be something that would be certainly of benefit. Again, from that productivity lens, the more that smaller businesses and medium businesses, in fact all businesses, can embed tech to make workloads more efficient, etc., would also be really helpful. So perhaps we may see something around cyber upskilling.
And the interesting thing here is this is a budget no one was really expecting as well. We
Correct.
thought there'd be an election and then a budget after that, but we're kind of getting it rushed through now.
Yes.
Is that going to make any changes to the way it seems like everything's already been announced?
Oh, I don't know. I think they always like to hold their powder dry just a little bit. But I think the thing with this one is too how much is an election announcement and how much is a budget announcement, and where the line is between those two things, given the proximity to an election, is always interesting.
Kaylene Hubbard from KPMG. Thanks for coming on the show.
Pleasure. Thank you.